Flash Friday Finance. I am in pain actually because I've been doing Pilates because I've had a bad big case of CGTT20. And in case you haven't caught that, it's actually clothes getting too tight in 2020 due to COVID-19 because we're at home. But anyway, so today I have brought along the wonderful Penny Allen, who is part of our team here at Property Ed. And Penny, can you please tell people what's your history about in finance? Introduce yourself.
Oh, hi. My background is over the past 20 years, I've worked end-to-end in finance. So the lending side, so meeting customers, doing the loan docs, moving into credit, doing settlements, and then as a business development manager in third-party banking. So that was working with mortgage brokers and helping solve any problems that they may come across.
Fantastic. So yeah, you're certainly very experienced and we really appreciate having you as part of my team. It's awesome. And the clients are loving working with you too. But we have been having some really interesting conversations around these first home loan and all the gifts that are coming from the government and how we can best use them and what sort of property. And we're coming up against some interesting problems, aren't we? Because we're seeing that people might be better off actually buying an established place that's around the 600 mark rather than buying a land. So what have you discovered about, particularly for people who are needing lenders mortgage insurance?
Sure. So a lot that we're seeing at the moment is around first home buyers. It's a great time for them to get into the market. There's so many government grants available. And one case study we've had recently is a young couple looking to buy their first home. And a few options to them were to buy an established property for $600,000 or perhaps look at construction. So they didn't quite have the deposit ready to go for the construction. But one thing that I did find out with my research was if they bought the land only, that doesn't actually qualify for the first home buyer deposit scheme, which would mean that they are up for mortgage insurance on the purchase, where if they bought an established house, they wouldn't need to pay that mortgage insurance. So it's actually a lot cheaper for them to do that.
That's a profound difference, because if you can avoid, if you've got a small deposit, I forgot to mention, of course, because I do every time, the compliance. Our disclaimer is in the notes. Watch out, please read below. But this is general advice, obviously, and if you want personal attention, please just call us and we can do this sort of analysis for you and help you just make the decision about what's the best property for you, depending on. So what are the things we've got to consider? I know we've got to watch for what size of deposit they have. What else are some of the rules around it, Penny, that you've come up with?
Sure. So generally speaking, if they're purchasing an existing property under the first home buyer deposit scheme, they would need to have a minimum 5% genuine savings. Whereas if they were looking at the land option, they would need a little bit more deposit to cover. A lot of lenders don't particularly like taking vacant land only as security, so they require a larger deposit.
Yep.
But also they need to include the mortgage insurance in that loan to value ratio. So that means that they need to contribute a little bit more.
Oh, exactly right. And so you could actually negotiate better on an established property than you would, because when you're buying land and building at the moment, they're all thinking, well, you're getting this gift from the government. So I reckon half the time they just up their prices, the 25 grand. So you're not getting any great benefit at all. You know, it's possible. You'd love them to guarantee the price, because I know I've had in the past, clients have had their properties valued close to settlement and it's come in under, and then they've had to contribute even more cash. You know, it's been a real problem. Yeah.
Another thing with the existing properties, if the property is under 5 years old and the original owners or no one else who's purchased it since then have claimed the first home buyer default, our borrowers might actually be able to claim that from the government. So that's an extra $10,000 or even in some cases $20,000 in their pocket after settlement.
Fantastic, because it depends whether you've got that in the city or the country. So what a gift that is. So
Yeah.
maybe look for something that's just a few years old, and then you get the benefit of the new and you get a grant. It's well possible. Well,
Yeah.
thanks, Penny. Love working with you. And have a great week, and we'll see you all next week. Thank you.